Is Loan Depot a buy? I am bullish. Let's get to it. So we have this article from Seeking Alpha. So Loan Depot, one winner from mortgage spread compression. So Loan Depot is a tactical buy driven by anticipated GSE intervention, narrowing mortgage spreads and boosting origination volumes. Trump has ordered his representatives to start buying mortgage-backed bonds. When these bonds get bought up, the bond prices go up and the yields go down, which in return that makes mortgage rates come down. So LDI's business model spans home purchases, refinance, equity search, and personal loans, positioning itself to benefit from increased transaction activity. And here we go again. So last week, Donald Trump said he was paying attention to the American housing market. He confirmed this intention when he asked government-sponsored enterprises, the GSEs, such as Fannie Mae and Freddie Mac, to purchase $200 billion in mortgage bonds. When GSEs make the purchase of mortgage bonds, they will narrow the mortgage spread, which is the difference between the average 30-year mortgage and the 10-year Treasury bond. This occurs because the price of MBS rises. MBS or mortgage-backed securities rises and their yield falls, and the yield on MBSs decreases. Mortgage originators will be able to offer cheaper average mortgages, thus complying with the Trump administration's wishes. So these are the things that Loan Depot does. So they help with home purchases, home refinance, home equity, home search, and personal loans. And then this is how they make their money. So they service the buyer, supporting the purchase, serving the mortgage, and optimizing the journey. So they can help you get a HELOC, refinance, do all these things. I am bullish on Loan Depot because I think that interest rates will fall. As interest rates fall, that also brings mortgage rates down, and Loan Depot will make money because they help people buy homes and refinance their houses as well. Right now, people are still paying interest rate on their mortgages, but as the Feds cut rates, the mortgage rates drop, and Loan Depot will be in the forefront to help people refinance their loans and a new home buyer buy their first home. Let's go check out the inflation rate. So inflation rate has been falling by a lot lately. So here we go. So we are at the 5 year. So we hit 9.1% inflation June 2022, and we've been falling down. And as of January 2026, we are at 2.4 inflation. This is great news because we are getting a new Fed chair, Kevin Warsh, and Kevin Warsh was handpicked by Trump to most likely cut rates, print money, and as rates fall, like I said earlier, that would bring real estate interest rates down. Let's go check out Loan Depot's fundamentals. Here we go, total revenues. So this is annually. So total revenues in 2013, they made $325 million. And as you can see, on December 2020, they made $4.5 billion. But since then, they've made less and less money. This has happened because rates have gone up. People are not buying homes, and people are also not refinancing their homes because rates are still pretty high. Now, let's go look at the technical analysis. So the technicals are not looking too good. Trump announced on January 14 that the GSE will start buying back mortgage-backed securities. And when that news broke, Loan Depot did very well. So let's find January 2014 here on my chart. So here we go. So we went from $2.63 all the way up to $3.25 when that news broke. But then it has been falling down. We are down about 42% since that news broke about the GSE buying back mortgage-backed securities. And we do have a support of at $1.23. This is not financial advice, but in my opinion, if it falls down to $1.20, I will load up the boat at these prices at $1.20 because I do think that our new Fed chair will cut rates. Inflation is falling down. Our unemployment rate has gone up. Anyways, that's my time for you guys today. I'll catch you in the next one.